Hello my friends, and welcome to a new video that I titled Slow and Steady Wins the Race. Well, I wanted to clean up with the myth that people need a lot of returns or high monthly returns to make a lot of money, or that you need to start out with a big account to make a lot of money eventually. All you need is consistent returns. All you need in quotation marks, that's already hard enough. And also you need to have patience, because it does take some time to build up a small account, but to see it black on white and with some tricks, it will definitely help you grow your trading career much quicker than usual, even if you start with a small amount. So let's take a look at this. Here we have the amount of months. I go with 5 years, so 60 months, and we start with 5,000 bucks and we make 5% per month consistently. So if you, on average, of course. So if you risk 1% per trade, that's 5 hours per month, which in my opinion is very doable. It's more than doable. I have more than this on average, roughly 8 to 10 per month on average. But if you are starting out as a new trader, 5% is a good thing to aim for example. And you can see that if you start with a $5,000 account, after a year you will have an 80% return already, which is with compounding obviously, which is staggering. 80% a year. A lot of people would kill for that with only 5 hours per month. If you only take the best trades every month and every week, this is very, very doable. I mean, some months you will have -3, -4, and then the next month you will have 10 or 15%. That's absolutely a given, based on random distribution of trade results in the markets. That's totally normal. All you need to have is perspective, patience, and a strategy that you can follow. So if we go to the end here, after 5 years, you're going to make 5K per month with a staggering return. Obviously this is based on you not withdrawing anything and you not paying any taxes. So that's something I didn't look at in this spreadsheet. You can also build that in when you start to withdraw, for example, or that you pay tax every 12 months. Let's say that you are living in a tax-free jurisdiction for capital returns and make it easy for now. But obviously, if you do your own spreadsheet, which is quite simple, then you have to take into account things like this. So let's say, however, that we are a better trader and we make 10% returns per month. After a year, you're already going to be at 200% with a 10% return per month. And after 5 years, you're already going to make quite some cash each month, which is a ridiculous amount to grow from 5,000 and 10% per month. I can tell you it's doable. It's absolutely doable. It might not be very feasible for the bigger accounts because you want to reduce your risk, but if you are on a small account, go for it. Maybe increase your risk per month per trade to 2%, and this is very, very attainable. Keep your drawdowns in check, of course. However, let's go with a more feasible amount, 5%, and we start with 10,000. So 10,000 is a starting amount that a lot of people, in my opinion, can afford, especially if you go into trading. This is something that you should have on your bank. And you're going to make, after roughly 4 years, you're going to make 5K each month, which is pretty nice. And 4 years for some people can be very daunting, very, very daunting. They want it all and they want it now, but it simply doesn't work like that. If you start with a $50,000 account, obviously that looks a bit different. You can live off your trading right away if you have the consistent returns. All I want to show here is that all you need is maybe around 5 to 10 good trades per month to make your returns. So let's say you have a 2-to-1 risk-reward ratio on average. and a 50% winning ratio. So you win, let's make it like this. So you win 2 5 times and you lose 1 5 times. How much is that altogether? 5. So you don't even need to have a huge winning ratio or huge risk reward ratio. All you need is 50%, 2 to 1, which is very, very doable in my opinion. It's only your mind. It's only in your mind. It's the mindset that breaks so many traders, not the market itself. So let's start with 10,000 here. And let's say you still have a job. So you have savings. You can deposit 500 every month. So here we are at 168,000 in the beginning. Now you deposit 500 every month in the end. Then in the end, this is almost doubled, or actually doubled, right? So you get double the returns by adding to your account every month a fixed amount. So you're basically investing in your own trading instead of investing into a ETF or mutual fund, stuff like that. You're investing into your own trading account because you know no one can give you 5% returns per month besides yourself, and you already doubled your returns. Here you can already live, you can basically quit your job after 3 years here, and then obviously you won't be depositing 500 anymore. Yeah, but that's the saving plan. And then also there are services like Darwinex where if you make a 5% consistently per month, you will gain a huge following on these sites. And Darwinex, for example, pays you 20% of the returns of your following each month. So with a 5% consistent gain, you can gain a following of 500,000, 1 million, 2 million easily if you do that consistently for 2 or 3 years. So I haven't taken into account that this comes in after 2 years, this comes in from the beginning. I just want to show you the possibilities of making consistent gains, very, very small consistent gains, and the power of compounding. So let's say you have a following of 50,000 on Darwinex. That adds another 500 bucks to your account each month, because 5% of 50,000 is 2,500, and then you gain 1/5 from that, so that's 500 bucks. So adding another 500 bucks to your account. So you can see after 1 month here we are already at a 15% return, then a 31. So after 6 months we are already at a 100% growth on your account with 5% per month, adding 500 per month from your own savings and another 500 bucks from Darwinex. In the end, we will be here at $500,000 with a very small starting account, a very small return account per month, and very small add-ons. Now, if we completely forget about the add-ons, let's say, but you can gain a bigger Darwinex following, say to 500,000 in the end. Obviously this completely escalates in the end, and I don't even want to know where it goes with 8. Actually I want to know. So let's put those to 0. If you gain an 8% per month on a $10,000 account, you are at 1 million after a year, after 5 years. So that's the power of small returns, small consistent returns, compounded. And adding to your account actually makes a lot of sense if you are consistently profitable and you still have a side job or a side gig. I highly recommend that. You can also, for example, apply a strategy where you only add to your account in winning months, for example, or you top up in losing months. Obviously, when you get to the higher account numbers, it wouldn't make sense if you lost like 50,000 a month and then you want to top up from your personal savings. That doesn't make sense. Yeah. So let's go with a realistic scenario of someone that's let's say he's an engineer, um, making 80k per year, or yeah 80k. So he has a $50,000 trading account, and he can afford to add $500 per month from his savings. After 5 years, he can also easily live off his trading. Actually, after 2 years already, he could replace his income completely from trading alone. And if you add Dominex on top of that, he can easily retire from his job after not even 2 years. So that's the power of compounding. I really urge you guys to play around with stuff like this in Excel, because everyone has such unrealistic expectations all the time about what it means to be a trader, or how much percentage of return you have to make. Even if you go with a 2.5% only on a $50,000 account, you can easily replace your income after 2 to 3 years with trading only. And those 2.5%, I mean, if you are a swing trader, or even a daily chart trader, I mean, the daily amount of time invested is ridiculously small. It's 2 to 3 hours maximum per day invested, and that's the kind of returns you can generate with that amount of money, and those really tiny returns as a retail trader in the Forex space with leverage, and not having to build your positions like the big hedge funds and so on. This is easily attainable. It's actually quite pessimistic. If you're a winning trader and you have your right expectations, you have a good strategy, you can make much more than that. So I hope that gives you guys some perspective on this whole topic. 5 years is really not that long. And if you keep looking for shortcuts and over leveraging and over risking and not being patient, in 5 years you're still going to be at zero or loss. Whereas if now you start being patient and you really commit to a trading plan that gives you consistent results, you will be here in 5 years or even better. Alright guys, thanks for your time, and I'll see you in the next one.